more than 50% below its all-time high, down 40% in the past year. And just last week, Solana dropped to $122 before bouncing back to around $138 today. The volatility is intense, but at the same time, Solana's fundamentals are stronger than ever. Institutional investors are buying, developers are building, and major financial firms are choosing Solana for real products. So how can a project look this strong on paper while its price keeps falling? Is Solana dying, or is this a rare opportunity to buy the dip? Solana currently trades around $135 after a sharp dip to $122. Despite the weak chart, the ecosystem is thriving. Solana now has spot ETFs, growing institutional interest, and one of the most active developer communities in crypto. When Solana's spot ETFs launched in late October, they attracted over $340 million in just 10 days. Meanwhile, Bitcoin ETFs were losing money. That's real institutional confidence. But the price still declined because several headwinds are weighing on Solana in the short term. The first is the meme coin hangover. Earlier this year, Solana's activity surged thanks to meme coin trading. But when the hype ended, network revenue fell 93%, and decentralized exchange volume dropped from $36 billion per day to under $1 billion on slow days. The second headwind is rising competition. Sui processes up to 297,000 transactions per second using parallel execution, giving it an efficiency advantage. Base, Coinbase's Layer 2, is also gaining traction as a hub for meme coins and new developers. The third factor is reliability. Solana's uptime has improved dramatically, but transaction failure rates between 20 and 45% during congestion still hurt the user experience. On top of that, ETF inflows have cooled from $70 million per day to around $7 million. The FTX estate still holds about $1.6 billion in Solana, which could be sold over time. And some corporate holders may be forced to reduce their exposure. But the long-term outlook is still extremely bullish. Solana's Alpenglow upgrade will cut transaction finality from 12 seconds to about 100 to 150 milliseconds. It will also boost throughput to over 90,000 transactions per second. The upgrade is set to go live on testnet during the Solana Breakpoint conference in December. Firedancer, a new validator client built by Jump Crypto, could eventually push Solana beyond 1 million transactions per second while improving network resilience through client diversity. Institutional adoption is also accelerating. BlackRock, Franklin Templeton, and Van Eck are launching tokenized funds on Solana. Western Union is preparing a US dollar stablecoin on Solana for its global remittance network. 16 public companies now hold over 18 million Solana, worth about $2.5 billion. Stablecoin activity is booming as well. Supply has doubled this year from $5.2 billion to over $11 billion, with more than 3 million daily users interacting with stablecoins on Solana. So what does this mean for price? Solana is holding around $135. Key support sits at $130. If that level breaks again, the next target is $120. On the upside, the important resistance zone is between $170 and $178. A breakout above that could push Solana toward $200. The next major catalyst is the Solana Breakpoint conference from December 11th to 13th. A smooth Alpenglow testnet launch could shift market sentiment quickly. So is Solana dying or getting ready to rally? Short term, expect volatility. But long term, Solana is building stronger fundamentals than ever, faster performance, deeper institutional adoption, and real-world utility. This could be the end of the meme coin era and the start of Solana's institutional phase. The real question is whether you'll recognize that shift before the rest of the market does.